Okay, let's unpack this. What do you get when you smash together something as, well, ancient as farming, growing crops, raising livestock with something as bleeding edge as cryptocurrency and blockchain? It sounds kind of wild, doesn't it?
It absolutely does. And yet, according to the information you've shared with us, this unexpected combination is not only happening, it's creating a whole new class of digital assets: agriculture, cryptocurrency, tokens.
Exactly. So for this deep dive, we're heading into the fields, you could say, both real and digital. We're using the stack of sources you sent over as our map, really, to figure out what these tokens are all about.
Right. Our mission here is basically to pull out the most important insights from your material. We want to understand the core concept, how they actually work in practice, who stands to benefit, and where this whole idea might be heading.
And right away, the basic definition from your sources seems pretty clear. These are digital assets living on a blockchain that represent real agricultural goods. We're talking wheat, corn, soybeans.
But also things like farmland and livestock.
Yeah, right. And the crucial bit, and your sources really emphasize this, is that they are often backed one-to-one by these actual physical commodities.
Yeah, that one-to-one link is key, I think. It ties the digital world directly to a tangible asset in the physical world. It's not just based on, sentiment.
Which brings us to the first big question. Beyond just the definition, how do these agriculture cryptocurrency tokens actually work? What's the engine driving them?
Well, the fundamental layer, as your source material points out, is blockchain technology. And this isn't just jargon here. The blockchain provides specific capabilities that are pretty essential.
And what capabilities are those exactly, according to the info you shared?
It really boils down to transparency, security, and efficiency. The blockchain creates this immutable, verifiable ledger. Think of it like a permanent record that tracks every transaction and piece of ownership data related to that tokenized agricultural asset.
Like a tamper-proof digital passport, sort of, and a history book for your bushel of grain or your livestock.
Exactly. And that ties back to the backing you mentioned earlier, that physical commodity isn't just floating around somewhere.
Huh.
Your sources note it's typically held in audited warehouses.
Okay.
Or verified by trusted third parties.
Makes sense. You need that trust.
Precisely. That verification process links the physical asset to its digital twin, the token. And once you have that token, the utility described in your sources is actually pretty broad.
Like what?
Well, you can trade it on traditional commodity markets or crypto exchanges, use it as collateral for a loan,
Yeah.
or even apparently spend it with participating merchants.
Okay, so we know what they are, how the tech works underneath, but let's shift to the big picture. Why do these tokens even matter? I mean, who benefits from taking something like a silo of corn and turning it into digital tokens?
This is where it gets really interesting. It seems like the real transformation lies here, both for the agricultural sector itself and, well, for potential investors too.
And one of the most significant benefits your sources highlight is increased liquidity, right?
Yes, definitely. Agricultural assets have historically been incredibly illiquid. It's not like you can instantly sell, a portion of your standing crop or a warehouse full of soybeans with just a few clicks.
Right, it's bulky, it's physical, it takes time.
Exactly. Tokenization changes that by enabling fractional ownership and near instant trading. You can sell or buy a fraction of a commodity much more easily and quickly than dealing with the physical asset itself.
Fractional ownership. But that's a fascinating concept here. So you don't need the capital to buy an entire truckload or a whole field anymore.
Precisely. And that directly leads to another key benefit your sources mention: democratization and broader access. Fractional ownership significantly lowers the barrier to entry.
How so?
Well, it opens up agricultural investment to individuals and smaller investors who previously just couldn't afford to participate in large-scale commodity markets or farmland ownership. It kind of levels the playing field a bit.
Okay, that makes sense for investors. But what about for the farmers themselves? The sources talk a lot about access to capital for them.
This seems massive for farmers. They can tokenize future harvests before they're even out of the ground, or tokenize crops they already have in storage.
Really? Even future harvests?
Yeah, this is the sources suggest. They can then use those tokens as collateral to get immediate financing or perhaps sell them directly to investors. Your sources indicate this dramatically reduces their reliance on slower, more traditional financing methods, like bank loans tied to land or equipment.
So it unlocks value instantly. Wow, that sounds incredibly impactful for cash flow, especially in farming.
Huge. And speaking of speed and clarity, transparency and traceability are also big themes in the material you shared.
How does that work?
This is where the blockchain's immutable record is really powerful. Every step related to that tokenized asset, its creation, ownership transfers, maybe even location updates, is recorded permanently.
So no disputes about who owns what or where it came from.
Pretty much. Your sources suggest this vastly improves supply chain transparency, makes it harder to commit fraud, obviously, and allows buyers to easily verify the origin and quality of what they're purchasing. You know exactly where that specific digital bushel originated.
And that transparency combined with the automation potential of blockchain that feeds into reduced costs and increased efficiency.
Absolutely. By automating processes with smart contracts, which are essentially just self-executing agreements coded onto the blockchain, and cutting out layers of intermediaries involved in traditional commodity trading and financing.
Middlemen.
Right. Your sources indicate that tokenization can lead to significantly lower transaction costs. One figure mentioned was up to 65% savings in some cases.
65%, wow.
Yeah, alongside much faster settlement times. Imagine the impact of cutting transaction costs by nearly two-thirds.
That's startling. And the reach potential, does it open up markets?
It becomes global almost by default. Tokenization allows farmers and agribusinesses to tap into global pools of capital and find buyers anywhere in the world without needing extensive international infrastructure.
And for investors.
Conversely, investors worldwide can easily diversify their portfolios across different agricultural assets and regions. It breaks down geographical barriers.
Okay, one last benefit the sources mention. Innovative financial products. What's that about?
Right. Because these are digital assets on a blockchain, they can be integrated into the world of decentralized finance or DeFi platforms.
Ah, okay.
So your sources discuss possibilities like using tokenized crops as collateral in lending pools, or maybe integrating them into yield farming protocols.
Right.
Basically creating entirely new financial tools and potential revenue streams that just didn't exist before in this space.
It all sounds incredibly promising in theory, but, is any of this actually happening? Are there real-world examples? Your sources provide some.
They do, yeah, and these case studies are crucial. This isn't just a white paper concept floating around. AgroToken in Argentina is a prominent example mentioned.
AgroToken, right.
They've apparently seen significant success, enabling over $30 million in tokenized grain trades.
$30 million in grain traded via tokens. And they weren't just operating in isolation, were they? The source mentioned partnerships.
That's right. They partnered with banks like Santander, helping farmers access financing and liquidity using their tokenized grain. That shows mainstream integration is actually possible.
Yeah, it bridges the traditional financial world with this new tokenized one. What else?
Another case study mentioned is GrainChain. Your sources note that this project focused on improving supply chain transparency and managed to reduce transaction times for participating farmers by up to 60%.
60% reduction in transaction time?
Yeah.
That's massive, especially when dealing with commodities that might be perishable or subject to big price swings.
Definitely. These aren't just small tests. These seem to be projects demonstrating tangible benefits in the real world.
So looking ahead then, what do your sources tell us about the future trajectory of agriculture tokenization? Where is this headed?
Well, the outlook presented in your sources is one of, pretty substantial growth. The overall market for tokenized real-world assets, which includes agriculture, is projected to potentially reach, get this, hundreds of trillions of dollars.
Hundreds of trillions. That scale is hard to even comprehend.
I know, it's a staggering number. But it reflects the idea that as blockchain adoption continues to expand, more and more real-world value could be represented digitally.
Okay, but what does the source suggest needs to happen for it to even get close to that kind of level?
Well, they point to a couple of key things. Firstly, the continued emergence of new platforms and services. Things that make it easier to tokenize a wider variety of agricultural products beyond just major grains and expand into new geographic regions.
Makes sense. More tools, broader reach. And can we expect deeper integration with existing financial systems?
Yes, definitely deeper integration seems key. Your sources anticipate more seamless connections with DeFi platforms, allowing for those sophisticated financial operations we talked about,
Right.
and also more mainstream acceptance. Things like partnerships with traditional banks becoming more common, maybe even listings on established commodity exchanges eventually. That kind of institutional involvement would dramatically increase liquidity and reach.
The sources also touched on sustainability and inclusion, which feels like a really powerful potential application.
It does. What's particularly compelling here, I think, is the potential for financial inclusion. Tokenization might bypass traditional barriers, giving smallholder farmers, say in developing regions, access to capital they just couldn't get before,
How?
by potentially linking them directly to global markets through their tokens, or even providing access to tailored insurance products based on their tokenized assets. And beyond that, it could also support sustainability efforts.
Like tracking carbon credits.
Exactly. Making it easier to track and tokenize carbon credits generated by specific sustainable farming practices, or helping farmers maybe get value from their agricultural data in new ways.
Those feel like applications that could have a genuine global impact. But are there hurdles? What about regulations as this grows?
Oh, absolutely. Your sources definitely note that as adoption increases, regulatory frameworks will need to catch up. This is critical for ensuring market stability, transparency, and protecting everyone involved.
Especially since these tokens are backed by real stuff.
Right. It's especially relevant because tokens backed one-to-one by a commodity have characteristics that are, well, somewhat similar to stablecoins. And stablecoins are a class of crypto assets currently under significant regulatory scrutiny globally. So that needs watching.
Okay. And finally, what about the underlying technology itself? Where does that go from here, according to the sources?
The sources anticipate continued technological evolution. We're likely to see more sophisticated smart contracts, ones capable of handling increasingly complex agricultural transactions automatically.
And better tracking.
Advancements in real-time tracking of the physical assets linked to the tokens, yeah. And also a broader adoption of something called tokenization as a service, or TA models,
Wow.
tokenization as a service. That last one basically means it would become much easier and potentially cheaper for even smaller agribusinesses to tokenize their assets without needing deep technical expertise themselves, like an off-the-shelf solution.
Okay. So pulling all this information together, the what, the why, the how it's being used, and where it's potentially headed, what does this deep dive into agriculture cryptocurrency tokens ultimately mean for you, our listener? Why should you care?
Well, if we connect all these dots from the sources, it could mean fascinating new investment opportunities, potentially in a sector you might not have considered accessible before, but now made liquid and divisible.
Right, you can buy a fraction of a farm's output, maybe.
Exactly. It's also just a prime example of how disruptive technologies aren't confined to tech hubs anymore. They're actively transforming fundamental real-world industries like agriculture. It's happening now.
So it gives you a front row seat to understanding how global agribusiness finance could be fundamentally reshaped how assets are valued, traded, leveraged. It's a practical, tangible application of blockchain technology that directly impacts the goods that, well, feed the world.
Yeah, it's a space that's evolving incredibly quickly, showing how digital innovation is extending its reach into the very fields where our food is grown, bringing potential for new levels of efficiency, transparency, and access.
In short, these agriculture cryptocurrency tokens, based on everything we've seen in the sources, represent a really significant potential shift in how agricultural assets can be financed, traded, and managed.
They're designed to bring much-needed benefits like increased liquidity, that enhanced transparency throughout the supply chain we discussed, and broader market access for everyone from the individual farmer to the global investor.
It's still a relatively new concept, as your sources point out, seems to have really gained steam only recently, but it's expanding rapidly and holds substantial potential to reshape global agribusiness and investment in the coming years.
Definitely one to watch.
Absolutely. And maybe just consider that scale your sources mentioned again, that potential market in the hundreds of trillions. What would it truly mean for global food systems, for supply chain resilience, and for investment if even a fraction of the world's agricultural value becomes instantly tradable, globally accessible, and verifiable through tokens? It certainly gives you something to think about.